Okay, so good afternoon, guys. We have already completed Unit 1 of Part 1. Now let's go for Unit 2 of Part 1, which is a legal and regulatory framework for SME lending. And this unit has again three lessons. That is, first lesson is RBI guidelines and regulations for MSME sector. Second one is type of customers and legal provisions. Then legal structure and documents for different types of customers. So let us go for RBI guidelines and regulations for MSME sector. So again, lesson 4, RBI guidelines and regulations for MSME lending. There are 6 topics which we have to study, and we will just concentrate on this. So the Reserve Bank of India acts as both central bank and the banking regulator of India. We all know this. And the function of RBI is to control and monitor the banking and financial system of the country. The Banking Regulation Act of 1949 and the RBI Act of 1953 gives the RBI the requisite power to regulate the banking system. So you need to remember these two laws: RBI Regulation, Banking Regulation Act 1949 and RBI Act of 1953. RBI regulates the Indian banking and financial system by issuing broad guidelines and instructions. Banks have fiduciary responsibility towards deposit holders, shareholders, and the public at large. Fiduciary responsibility means they are in the relationship of trustee, right? So banks act as trustee of their deposit holders, shareholders, and the public at large. Households deposit their savings to the bank in good faith and trust. This pivotal role requires that banks operate in a prudent, efficient, and profitable manner. It is therefore crucial that a regulatory agency oversees the banking sector. Traditionally, the RBI's regulatory and supervisory policy initiatives are aimed at protecting the interest of the deposit holders, orderly development and conduct of banking operations, ensuring the liquidity and solvency of banks, and maintaining overall financial stability through various policy measures. So these are some traditional functions of RBI. The RBI also reviews the requirement of various sectors to ensure the smooth flow of funds and offer substantial thrust support to underserved sectors, which is also known as priority sector. So priority sectors are the sectors where RBI wants to divert the funds, where RBI wants to divert the banking credit. Now, many micro, small, and medium enterprises activities fall under this category. Priority sectors collectively employ a significant portion of the India's population. It is important to understand the regulatory guidelines for MSME lending as well as the priority sector guidelines. So by end of this lesson, you should be able to describe the role of RBI in SME lending, describe various RBI guidelines in SME lending, and determine the regulatory directives related to priority sector lending with the MSME sector. So these are the things which we are going to study. Now let us understand another one. So this is end of topic 1. Let us go for topic 2, which is also biggest topic. So what you need to know. This actually contains all the content which we have to study for this unit. So the SME sector, the SME sector presents significant opportunities to lenders. Despite the increase of the credit flow in this sector, access to timely and adequate support from the bank is still critical problem. We have already discussed what are the problems SME sector specifically faces, and one of them is timely and adequate availability of banking credit. Then fewer than 1/3 of MSMEs have access to credit from banks. The remainder depend on informal lending institutions for their borrowing needs, usually a high cost. So we have already studied this, that most of the MSMEs, they're dependent on informal institutions like money lenders and chit funds and all those things, and where they have to pay a very high interest cost. In order to enhance the timely and adequate flow of credit to MSME sector, various measures have been initiated by RBI. In this section, you will learn about the RBI guidelines related to MSME lending. These guidelines include norms, security norms, timelines, and government support. So what are the various norms? Lending norms, right? Then security norms, what is the security, like if they want to avail loan, then what is the security they have to give? Timelines for how long the loan can be given, and government support. What is the government support available? Now, Reserve Bank of India guidelines for MSME sector. Below is a list of categories with their corresponding guidelines. So general guidelines. Loan application should be in a common format and be trilingual, English, Hindi, and the vernacular language. So the application form has to be in common format, right? There has to be a standard format for application. Plus, it is to be trilingual, English, Hindi, and if there is any vernacular or local language like Marathi, Gujarati, then it has to be in that languages also. Banks must maintain a register at the branch in which the date of the receipt of each loan application, acknowledgement and sanction or rejection of the request with the reason for the rejection are to be recorded. So there is register which is to be maintained at branch, right? So this is registered at the branch which is to be maintained. Then there is to be common format and it is to be in trilingual, that application form. Then the register is to be maintained at branch where the banks have to note down the date of receipt of loan application, then what is the action taken, acknowledgement and sanction of rejection of the request, and reason for rejection if any. So these are general guidelines. Now credit decisions. So the loan application must be adjusted with specific time frame as follows. The loan amount not exceeding to 25,000 rupees, 2 weeks. So not more than 2 weeks should be taken. So within 2 weeks the bank should at least tell customer that whether it has been accepted or rejected. Up to 25,000. From 25,000 to 5 lakhs it is 4 weeks, 1 month. And over 5 lakhs it is 9 weeks. So 2 weeks, 4 weeks and 9 weeks, right? So 20 below 25,000 it is 2 weeks, 25,000 to 5 lakhs it's 4 weeks, and over 5 lakh it's 9 weeks. So banks are directed to sanction composite loans when there is borrowing need for both the term loan and working capital, where the amount should not exceed rupees 1 crore. So there can be composite loan also. Composite loans means when the proposal includes 2 or more loans, types of loans, right? We have term loan and working capital. They are 2 different types of loans. And if they are there in that loan proposal, then that is composite loans. Now, as per Nayak committee report, the credit decision of up to rupees 5 crore, banks are advised to adopt turnover method, details of which will be discussed in the subsequent lesson. We have already studied turnover method in our credit analysis and banking advances subject, where turnover method is 20% of the turnover, 20% of the loan, 20% of the sales is given in the form of working capital limit to arrive at the working capital requirement. So how working capital requirement up to 5 crore? This is very important. For loan up to 5 crore, turnover method is used, which says like 20% of the turnover, the sales turnover, that is considered as the working capital requirement. Promoter borrower contribution. For loan up to rupees 25,000, the margin will be nil. So there is no margin money required for loan up to rupees 25,000. For loan over 25,000, the margin is 15 to 25% as directed by bankers' lending norms. So whatever bank's lending norm is there, then that is to be followed. But up to loan, for the loan up to 25,000 rupees, there should not be any margin requirement. And for loans about 25,000, there is a margin requirement of 15% to 25% as per the bank's lending norms. What are the lending norms? Now, managers of the branch, specialized branches should be given the discretion to sanction ad hoc limits to the limit of rupees 20% of the sanction limit. So, for example, there is a MSME borrower with like limit of 1 CR. Let's say 1 CR, right? There's a limit of 1 CR. So up to 20% of the loan can be sanctioned as ad hoc limit. Ad hoc limit means temporary limit. If in case some working capital comes up, so for 20% of the limit, the borrower does not need to go to the higher authorities. It will be done by branch manager only. So that speedy disposal of loan applications can be done. And when lending to the new applicants, all managers must be vested with the power to approve loan requests, right? So everyone, when talking about new applicants, all managers must be vested with the power to approve loan requests, right? Now, for all working capital limits of rupees 10 lakh for MSME clients, no collateral is required. So any MSME client with who's asking for working capital limit of up to 10 lakh rupees, then no collateral is required for that, no additional security. Now, no penal interest to be charged on private sector loans up to rupees 25,000. So for the loans up to 25,000, there is no penal interest, right? So zero penal interest. Now, the interest rates on the loans are to be based on SME risk rating model, which will be discussed in the subsequent lesson. So there is a risk rating model which is to be followed for SME lending, and on the basis of what score he gets in risk rating model, on the basis of that interest rate is given. Now loan up to rupees 200 lakhs, that is 2 crores without any collateral are eligible for CGT MSE coverage. So if there is no collateral given for loan up to 2 crore, the loans like they are eligible for CGT MSE coverage. We have already studied about CGT MSE coverage, how it works. Now asset insurance is waived up to rupees 25,000. So if you are getting, if any SME customer is taking a loan of 25,000, then asset insurance is waived. He need not insure his asset. No processing fees to be levied if the proposal is declined. So if loan is not sanctioned, then there will not be any processing fees for MSMEs. Now no prepayment of pre-disclosure charges, no prepayment of pre-closure charges for the loan up to rupees 5 lakhs. So for the loan up to 5 lakh rupees, there should not be any no prepayment or pre-closure charges for the loan up to rupees 5 lakh rupees. So any prepayment which customer wants to do for the loan up to rupees 5 lakhs, he will not have to pay any charges. Otherwise there are prepayment charges, right? So now priority sector lending norms. So priority sector refer to those sectors of the economy which need timely and adequate credit but may lack attention in the normal course of commercially driven lending priorities. So normally banks don't want to lend, but they will have to lend because it is very important sector of economy, because it employs a lot of people and also it comes under the priority sector. The RBI therefore issued priority sector guidelines to ensure that low income individuals and few specific sectors including micro and small enterprises are given fair and transparent access to financial products and services. With this directive, the RBI has made sure that the banks have clear loan targets to those sectors as a percentage of their new advances each year. Eligible categories include agriculture, micro, small, medium enterprises, export credit. लोकेशन भेजा मैंने आपको. हाँ बस वो देख लो, आप सिम्बायसिस आ जाओ. हाँ 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 हाँ. So now it is here. Now RBI has made sure that banks have clear loan targets to these sectors as a percentage of their net advances. So what RBI has done now, for example, 100 rupees is granted as credit by any bank, then there is a certain percentage which banks have to give to percentage of this total credit which is to be given to priority sector lending only, to priority sector only. Now, eligible categories include agriculture, micro, small and medium enterprises, export credit, education, housing and social infrastructure, renewable energy, right? The guidelines stipulate target credit exposure to borrowers in these sectors. So target is also given, how much they have to meet, and the bank's priority sector advances are monitored by RBI on regular basis. So these are the measures taken by RBI, right? So there's a master circular which you can download it from this link, right? So I think this is clear now. Okay, so we have completed the topic 2 also. Now let us go to topic 3. So topic 3, what you need to do. You have learned that SME sector provides substantial opportunities to create the loan book of the bank, more so under priority sector lending. As per the guidelines detailed by RBI, you know that as a responsible officer, we should ensure timely and adequate credit. The following action will help you serve your SME client accordingly. So these are the things which you need to keep in your mind being a responsible credit manager. First of all, recognize whether the loan request can be classified under MSME sector, and if so, under which specific sector. Right, so recognize it first, then identify the needs of the borrower and map the relevant scheme under which the proposed loan is to be financed, which we have already studied. You have to identify the needs of the borrower and you have to make sure under which scheme this can be given. Then refer to the RBI guidelines relating to time norms, security norms and other general guidelines. Then discuss with the borrower and provide clear clarification on various terms and conditions of the loan. The RBI guidelines insist on bringing clarity to the customer on these details. Then decide whether the proposal is viable and arrange to communicate the decision within the stipulated time norms. So these are the things which you need to do as a responsible credit manager. So this is the end of topic 3. Now topic 4 is a case study. Here Mr. Yogesh Gupta, proprietor of MS Gupta and Sons, submit an application for a loan facility of rupees 8 lakhs to purchase a stitching machine, as he is expecting repeat orders from one of the export oriented units of this supply of shirts. He wants to purchase 15 machines for the total cost of 9 lakhs. He is prepared to contribute the margin of rupees 1 lakh for his own sources. So he is ready to, out of 9 lakh rupees, he is ready to give 1 lakh as margin money, and 8 lakh rupees he has to purchase. He has to get in the form of credit. Now he has approached the bank for financial assistance. He mentions that he is not able to provide any collateral. Right. So in your role as a lending officer, with understanding based on the above lesson, you will be able to position to arrange credit to Mr. Yogesh Gupta as follows. You know that under the structure of Prime Minister's employment scheme, the proposal can be covered. This scheme is available for the entrepreneurs for an amount of rupees 10 lakh. The minimum qualification of the borrower must be least 8 standard. The margin requirement is 10%. Right. So these are the things which you have, which form the eligibility of Prime Minister's employment guarantee scheme. So you have to find out various employment schemes. So you have to find out various schemes of the government where you can fit in your customer. Then as per the scheme under MSME lending, banks cannot insist on any collateral for loan up to rupees 10 lakhs. So again it is covered. The proposal can therefore automatically be covered under CGT MSE. So for the loan up to 2 crore loan, it can be covered under CGT MSE because it is unsecured loan. Now this facility shall be reckoned for the bank's priority sector lending figures and thereby helps you improve your bank's ability to meet PSL guidelines, that is priority sector guidelines or priority sector targets, which has been set by RBI. So these are the things. So I hope we have covered topic 4 also. This is a small topic. Now topic 5. So it is important to understand the key guidelines and directives of the RBI with respect to lending to MSMEs. The impact of these guidelines need to be understood. The following questions may be helpful in this area. So you need to ask, do I understand how the RBI impact lending at my institution? So what are the various government RBI facilities or government things which are helpful, and whether RBI actually impacts lending, how it impacts lending institution, mainly by setting priority sector guidelines and various directives. Now what directives apply to the loan I have asked to analyze, right? So what are the directives? If there is any directive, so you have to identify those directives for the particular type of loan which has come to you as a credit manager. Then am I meeting the bank's requirement to handle the request? So are you able to meet that requirement? Then am I able to guide the customer properly based on their borrowing needs and the extent the benefit offered by the government under the appropriate schemes? So these are the things you should keep in your mind. So and last one is about your quiz. So I think this is enough, and thank you for your time. You've covered this chapter. Thank you.